Hard-hit oil markets negatively impacted Asian stock markets today. This follows the U.S. West Texas Intermediate May futures oil contract price diving into negative territory yesterday, which essentially means that the holders of that particular dated oil contract would have to pay someone to take it off their hands. This resulted due to there being oversupply of oil and holders of these contracts having little or no storage space available to place the physical product. In Japan, the Nikkei share average ended the day down 1.97%. Hong Kong stocks were hardest hit among the markets we observe. The Hang Seng Index down 2.2%. Mainland China was also hit, but to a lesser degree, the Shanghai Composite Index closing down 0.9%. Over in the United States, markets were subdued following a good run in the week beforehand. Reality appears to have dawned in around the massive hit that the global economy is set to take from the impacts of the COVID-19 pandemic. And a sharp fall in US oil prices into negative territory also shook sentiment. And despite the flood of stimulus from monetary and government treasury authorities, the health crisis is likely to continue to have a massive economic and social impact, which can't be solved by a cash injection alone. The Dow Jones Industrial Average ended the day down 2.44%. The S&P 500 declined by 1.8%, while the Nasdaq ended the day 1.1% in the red. The local market is in negative territory, with the all-share index down as much as 2% at last check. Financial counters and resources especially having a bad day. The local currency is also on the back foot, with the rand having traded a large part of the morning at 19 against the US dollar. Following significant tumbles in the US oil market futures price, spot Brent crude oil prices have also fallen substantially today. They're down around 17.5% on the day, trading around $21 a barrel. Let's take a look at the indicators. Well, for more on the markets, I'm joined on the line or via Skype by Owen Nkomo. He's the CEO and founder of the Nkunzi Wealth Group. Thanks very much, Owen, for joining us. So markets are looking quite subdued at the moment. I suppose what's been happening on the oil sector or oil market is in large part to blame, but also the realization that COVID-19 is going to have massive impacts on the global economy.
Yes, definitely, Nombu. The COVID pandemic is causing untold pain. It's happening in front of our eyes. The markets have collapsed. The oil markets yesterday, with some of the contracts, we're trading quite soft. We've got Brent crude oil today trading below $20 at the moment. And yesterday we had the West Texas Instrument, the intermediate delivery contract, trading sub-zero. So we're living in very interesting times. And our market is following global markets down 2% this afternoon.
Yeah. Owen, do us a favor, educate us. Take us through the difference between the two contracts, the WTI, which is a US contract, and the Brent crude oil contract, which is more your Arabian Gulf type of product. Just tell us about that.
Yes, so look, there's basically three reference points when you talk about oil. There's three products that dominate the world. You've got in America a product that is drilled and refined in America, and that is sold off the coast of Oklahoma. That is sold in Oklahoma, and it's definitely an American product, and it's sold in America. It's called the West Texas Intermediary contracts, which is oil that is only used by the Americans, and it's obviously got challenges in terms of transporting that kind of oil to the rest of the world. And then you've got oil that's mined in the North Sea, where you've got countries, that actually produce what we call Brent crude oil. So in South Africa, when we talk about oil, we need to be talking about Brent crude oil, which makes up 66% of the global market in terms of production and use of that product in the rest of the world. And then you've got third derivative, which is the Dubai and Oman oil, which is mined obviously in the Middle East, Nombu.
Right.
So yesterday's conundrum was certainly not around the Brent crude oil that is falling today, which is down about 16%. trading at about $19.80 a barrel, but instead the West Texas intermediary delivery.
Perfectly explained. Now, of course, we have seen that Brent crude oil has come down quite substantially, down about 17.5%, but perhaps a little bit more. Now you say it's trading below $20 a barrel. So what does that then mean for the man in the street? Because the future stuff is the future stuff, but what does the spot Brent crude price at a lower level now mean for us in terms of fuel prices at the pump?
It is good news if you are looking for a lower fuel price at the pump. I do anticipate that the next drop in the price of fuel is going to be close to 2 rand, if not more than that. And if the price of Brent crude oil continues to fall, I expect that we could get even more cuts in the fuel price. And the other good thing, Nombo, is that the price, or rather the level of inflation, is not going to continue to go up. We support a lower interest rate environment, which is very good because obviously some people are going to be under pressure post this lockdown. We already have been under pressure. So if the interest environment still accommodates lower interest rates because the oil price is very low, I think it's a good thing for South Africa.
Yeah.
It just unfortunately is a challenge for those people that have invested in companies like Sasol.
Yes, which brings me to my next question, Sasol. We have a lot of people who obviously try and invest independently. You know, there are lots of platforms online where you can say, I'm going to give this a go. But obviously the best thing to do when you invest is to read around the area or the sectors that you're choosing to invest in. But from your perspective, Sasol, would you invest in it right now, or do you think it's set to crash and burn?
No, look, I mean, I wouldn't think it's going to crash and burn, but I think it's going to face a lot of challenges. Management is already facing a lot of problems regarding their American project, which is in Louisiana, which is the Lake Charles project. There's lots of projects overrun there. The weakening currency is not helping the situation. And I think the lower fuel and energy pricing in the current environment is not helping Sasol. So whether you buy the stock or not, I think it depends on how much homework you have done on the company. If you think that management can rescue the company, if you think that the oil price will reverse and go back about $30 to $40, then I think these are good levels to be buying Sasol. But no, if you haven't done your homework, I urge you to go and buy something else.
But
because Sasol is going to remain very volatile.
But what would you do, Owen Ngomo? What would you do? What are you doing right now?
That's an unfair question. Honestly, though, we are currently watching Sasol. There is far more questions in terms of making the decision around Sasol than you are having answers. We don't know if they will manage to raise more capital. We think they'll be forced to issue more paper, and the price is therefore going to be depressed. And we don't know where the price of oil is going. So given those facts, it doesn't matter how cheap you think Sasol is. I think at this stage that it's only a share that should be traded by the brave. And Nombu, I'm being honest, I'm not brave enough. I invest in things where there's information, where I can make sense of the numbers. At this stage, you are literally just gambling in Sasol.
Yeah, no, that makes sense. And then, of course, this evening, we're expecting the President, Cyril Ramaphosa, to speak to the nation. We're hoping that he's going to give us some guidance in terms of the lockdown. Is it going to be extended? Is it going to be relaxed? And very importantly, what economic and financial stimulus he can give to the economy. What are your expectations, and what is it that you think that we need to be doing as South Africa Inc. in order to get out of what is really a terrible mire, economically speaking?
That's yet another difficult position, but I think we need to be using our brains to deal with the situation. We need to be thinking smart, and we need to apply basic logic. We need to save lots of jobs out there, and at the same time, we must understand as South Africans that we don't have the luxury to print money to support some of these social requirements, to support the small businesses out there. The government has already committed money, but I think that what has been committed has not happened practically. I haven't come across anyone who's told me that they've been given the cash. I'm expecting the president to give us an update in terms of what's going on that side, and hopefully maybe the Minister of Small Businesses is going to be there as well to advise what's going on. We're going to pay day number, and people haven't been productive for the past 30 odd days. Let's hope we're going to see some more incentives coming in to save small businesses, to look after the poor people that are unemployed, that don't have the luxury of the middle class guys that might have a little bit of cash. The president needs to extend his hand. But Nombu, I tell you this, I pray and I hope that post this COVID, as South Africa, we will understand that we got into deeper debt just because we needed to deal with COVID. The things are not going to be the same going forward. It's going to be difficult. But my hope as well, Nombu, is that the president will be on time today.
Yes, that's all of our hope. Let's cross our fingers. But let's continue about the initiatives that government can inject into the economy. There is that offer by the international institutions, the IMF and the World Bank, for coronavirus money that's available. But there seems to be a reluctance to tap on it. And we know that the fiscus is empty. Do you not think it would be wise for them to tap onto that? I mean, I know that President Ramaphosa talked about tapping on to about $60 million US. I mean, in country terms, that's just nothing. I mean, if you do the calculation, what is that in rand terms? It's what, R1 billion or something? What can you do with R1 billion when we have so many problems and the fiscus is empty? Yeah,
we definitely have a very difficult conundrum, Nombu, because like I say, we've always had a poor economy, at least for the past 5 to 10 odd years. Our coffers are empty. National Treasury is struggling, in my view, to just find that middle ground. That will help the country continue. So I do think, to an extent, if we get the funding from IMF at the right price, we should consider taking it. And at the same time, I think let's look at our local mechanisms as well. I do believe that the government has got access to relatively decent amounts of cash with some of the reserves. We now have to start tapping into the reserves at the Reserve Bank to deal with the current environment, and then we can replenish the reserves post dealing with the COVID environment. But I think what's important is for the President and Ubaba Kanyako and the guys at National Treasury and the Minister of Finance, Ubaba Mboweni, to work together and churn out a solution that will make sure that we can at least make sure we avoid social unrest by making sure that our most disenfranchised citizens in the country do get looked after. And secondly, that small businesses also do get the support they need to make sure that they can continue their businesses and not necessarily fire people.
Yeah, we can only hope that indeed that comes through this evening. Thank you so much, Owen, for your time. That was Owen Nkomo. He's the CEO and founder of the Nkunzi Wealth Group. We'll have more news for you after a short break.